Hey traders, happy Monday, everybody. Welcome to Charts and Coffee. Hope everyone's doing really well. Hope you had a good weekend. I missed you guys on Friday. I had a Forex trader battle that was scheduled at the same time. And so I did miss you guys on Friday, but thanks for all the questions and the emails. I appreciate the concern. Yeah, I think that might be our first sort of no Charts and Coffee day that we've had since I started this back in October of last year. So anyway, love that you guys are enjoying the show, and thank you as always for your time and questions. Speaking of questions, let's get to it. Reading Forex in 5 right now. Great read. Thank you, Foxtown. So Forex in 5, I wrote back in, oh my gosh, 12, 11? It's been a minute. And so Foxtown, you'll see a lot of the concepts around the historical volatility that I started playing with around that time, because within the time that I was writing the book and then when it was subsequently published, Auto Chartist had just released this tool called Power Stats back then. And it was a historical volatility, and it completely revolutionized my trading. And that was well over a decade ago. And then they expanded the number of symbols that they pulled this data on. So fantastic. Thanks for reading it. Hey there, PH. Saw the trade battle. You were laying out some great knowledge. Did you win the final tally? PH, I thought that we might see a break down in Bitcoin. I don't know. We'll see. I don't know what the final tally is. I can't remember Kathy's positions right now, so I couldn't tell you where we are with the head-to-head, but it was a blast. And the whole point was to get some trades out there, sort of put the ego aside and just put some ideas and that were, transparent trades backed by the ideas that my trading is rooted in. So thanks so much. I appreciate it. Hey there, JMO. Do you think we are seeing an overreaction to oil? Okay, yeah, let's go take a peek at crude oil right now. Will it continue to slide? So there's probably two things at work right now in crude, and one is, of course, the OPEC news, and so the increase in production that they've agreed to. The markets are typically going to react bearishly to those types of moves, and so we see that happening. You can see that intraday, the weakness. But would I consider this a downtrend? Would I consider this a harbinger for more weakness? And remember, we can break a trend with one candle, but we cannot make a trend with one candle. So this is really the same type of distribution that I think we could have easily labeled the market's behavior as in March and in May, and now it's happening in July. But generally speaking, I'm still going to be a bull. I'm going to be a buyer in crude. And please remember, I can root for the bears. We can root for the bears. We can root for the sellers. We just may not be joining them on some type of top picking extravaganza, all right? I don't want to be short in a market that has been generally double green. But I hope from time to time, because remember, pullbacks don't happen because of buyers. Pullbacks happen because mostly of sellers, and then in some ways because buyers aren't willing to step in. But I'm actually thrilled. And if you're part of Sector Secrets Mastery, by the way, what do we do on days like this? Well, leading up into this very pullback we're seeing, the markets were too extended to be buyers at highs, and yet they hadn't pulled back. So many of you in the Sector Secrets room know, gosh, we haven't been that active, because why would I put my capital in harm's way just because? We've been taking little profits out here or there. We actually took advantage of crude not too long ago. We might have that one last trend trade here. We took advantage of bonds, so there's small pockets of opportunity. But those of you that are in the master, you know what today is, you know what this week could be. It's shopping time. This is what we've been waiting for. We've been waiting for those pullbacks. So on one part, it is OPEC. And on the other part, my friend, it's the overall weakness that I believe we're finally, gratefully, seeing in the equities. Am I a bear? No, gosh, earnings so far have not been disappointing. I just don't have yet a pullback that I would really love to jump into, but we are getting really close. And here we are at the 21 exponential, which is great. Again, I'm not interested in picking a top and waiting for the retracement, but I sure am rooting for those folks who are trying to sort of tip the scales, if you will, because that's going to lead us to our pitch. That's going to lead us to our retracement. And I think part of the pullback that we're seeing, I have a very low cost, 48, 50 cent option position in MRO. It was a non-trending position. I might pull that one. And yeah, I'm probably going to stick with, again, if you're in the sector secrets room, you don't have to ask me if I'm getting in or getting out, right? Because you know the ground rules. I never want you guys flying blind, waiting for the next alert to know what to do. You know, at the moment we put the trade in, what our budget ideally is, what the loss cannot exceed individually in our accounts, and what my paper cut stop losses are. Stick with the paper cuts. Believe me, stick with the paper cuts. In other words, stick with those small losses that are designed to keep based on premium and designed to keep you from risk of ruin. Small losses are okay, even if there's a whole bunch of them. Small losses are okay. It's the big losses, or worse, adding to losses, that are ultimately going to be the demise of your account. So paper cuts are fine. No losing a finger, okay? All right, so yes, we're going to see some weakness in USO. This will be our second trade in crude oil in the last month or so. Last one was great. This one's probably, all my cards on the table, this one's probably going to be a little paper cut, and then I'll move on. No revenge trading, because the first question that a lot of times people ask once it gets stopped out of a particular market is, when do we get back in? Oh, no, no, no. In fact, if anything, whatever market you were just stopped out of, put it on a temporary do not trade list. Look elsewhere for where the clarity is. One of the things that I've been looking for, I think I mentioned this to a few folks in the futures room, but that is, if we continue to see a pullback in the NAS, I am looking at, and we're getting tantalizingly close. If you guys are wondering, what am I looking at and getting pretty excited about? We are getting tantalizingly close to starting to build a position, an oversold long in the Russell. So put the Russell on the radar. You could probably throw KRE on there as well. The cool thing about this position, much like MRO, where we have a choppy market, non-trending entry, the risk can be very, very tight. So if you're interested in, those kinds of things that I'm doing, definitely come check out what we're doing over in the Sector Secrets room. And so my Sector Secrets folks, that's going to be on the radar for sure. So let's see. What else do we have here? Next question is, hang on, Gay. I'm trying to find the next question. Yeah, are folks getting nervous about the variant? I don't know if that's what it is. I don't know if it's sort of the illiquid trading of summer. I don't know if it's just, it's time for a pullback and the buyers aren't willing to be, long at the top of the range. Remember this, and I think it's going to help you guys with position sizing. And I'm looking at my list right now. I really need a haircut. I'm looking at my list right now, and I wrote down here, sector rotation, study the sector rotation. Remember, sector rotation, let me see if I have my image here, but sector rotation is like a Ferris wheel. People can, it might sometimes feel like Ferris Bueller's Day Off too, but it's like a Ferris wheel. And the reason I say that is because, think of the folks at the top of the view and the folks at the bottom of the view, the folks at the top of the view and the bottom of the view. Sector rotation isn't as tactical and strategic as Wall Street and financial media want to make it sound. It's just an unwillingness to buy at new highs, typically parabolic highs. And then when the institutions and portfolio managers and, let's call it big money as we call it, no longer want to be buyers at those levels, they'll start looking for bargains. And it's usually going to be the bottom of the Ferris wheel. So right now I'm looking for things that are unloved, right? I'm looking for things that if we lose our desire to continue to be long tech, what is going to ultimately look very tempting to buy. Tech again, probably not. Rotation, here's a great example of rotation. Think about two corners of the market that were pretty much ignored through last summer's rally in the S&P and in the Dow and in the NASDAQ. Energies and financials. They were dumpster fires for probably 2/3 of 2020. And then all of a sudden, as the rotation came around to we're not going to be buying the indices at these parabolic highs, what happened? Yeah, it started to level off. It started to pull back. But those two sectors saw the light of day. The sun was shining. And so think about sector rotation in that regard. And we'll talk about that more in the mastery. But, just to give you an idea of what I'm looking at, I want to find things that haven't been necessarily benefiting from a lot of, the tech rally that we've seen. So tech-led, I should say. But by the way, please know this. I am not bearish at all in these markets. Double green on the NAS. What does that mean? I have fully stacked EMAs. 8 over 13, 13 over 21, 21 over 34, double green on the JT multi, mostly green grab candles. This is, for now, a retracement. The difference between a retracement and a reversal is a very squiggly line, agreed, but this is still very much a retracement, right? All I need now, all I'm looking for now is a markets in turmoil special, and we're good. All right, so let's see. Next question is, let's bear with me. So, I don't know Rick, we could talk about what's under the hood, but, and I totally appreciate that. But the problem is the markets can be amazingly delusional for long periods of time. And the idea that the market should be doing something, they should be pulling back or they should be moving higher. Those are typically going to lack the timing necessary. And they're, usually going to be very tricky, if not non-existent trades. But I agree with you. We could have said that this market was ridiculously priced, but from where? 14.1, 14.4, 14.7, 14.8, 50. You know what I'm saying? So the same folks that will probably be saying, "Hey, I'm short from the highs." Come on, if you're on financial Twitter like I am, all of a sudden everyone's going to be tweeting, short from the highs. It's come on. So exactly. But I agree with you. I think there's been a lot of wobbly stuff and we're finally able to see the pullback that I believe is going to give us some great blue light specials. I'm glad it's finally happening and it's going to serve us, my friend. So thanks, Rick. Yeah, I think you're right. When are you planning to have a webinar on? Oh, Esteban, we have the next webinar, I was alluding to some of the sector rotation, alluding to the way that stocks and sectors and indices are moving, that Ferris wheel, all that good stuff. That's really very much part of a daily time frame, longer term time frame, sector driven analysis. And I'll be doing that. Funny you ask, August 2. So 3 weeks away, we're going to be doing that. So for those of you that just finished taking the playbook class and you've got now a bird's eye view of my day trading and the processes and even better, all the automated tools that we shared included with that class, now it's what's the other side of it? What's the bookend? What's the second half of the day look like? And I'll be sharing that on August, pretty sure it's August 2. Okay, but I'll be telling you guys more about that. We'll dive into more of those details going forward. Okay, so definitely we'll definitely talk about that. All right, okay. Sorry, my pencil fell apart. That makes me incredibly sad. Oh, you ever lose a screw and go, oh, that's where the screw came from, which I probably threw away. Anyway. So that's coming up on August 2. Can we take a look at XLF and XLE? Of course. So XLF, this one's interesting to me, mainly because do you see how it was a wider range and it's been compressing and compressing? We're getting more blue grab candles. We're finding a range. We're in a nice thick volume area. This is setting up for, I think, eventually a breakout from the range. So I don't think it's ripe quite yet, but it's getting there. Not quite yet. Remember, we do have, earnings already having come out in financials. That's sort of the beginning of the financials. The beginning of the earnings is, the release of all those financials earnings. So we're deep into earnings, not deep into, we're beginning earnings season, until we get to that week where all those important heavily weighted tech names are releasing. That to me is the heart of it. And then it just sort of peaks. And then it was, in terms of interest and impact for me in terms of the impact on the indices. So great point on the XLF. I would love to see a breakout there. XLE, let's wait. Although we've gotten right back to that VWAP, we've found support out before, but remember, that's a technical conversation. The news right now is the aftermath of OPEC. So what I would tell you to do with this, let me zoom in a bit and show you. So it's a large down candle. Let's wait for a minor low. And those of you that just took my day trading class, well, there are things that we look at on the end of day charts and how much better it'll make you an end of day trader while it's making you a better intraday trader. See that right there? That insight, that little minor low, right there. That minor low never fired a bullish signal. So I'll wait for another one. Maybe we'll get another minor low tomorrow. That would be Tuesday. And I would wait for another minor low bullish signal, but we don't have it yet. We do not have it yet. So be careful. Again, this isn't just technicals. It's not just volume. It's not just, the secret squiggles on the chart. We do have this news that the market's going to have to discount, going to have to absorb. And then we can see if there's some bidding on XLE. But remember, we would like our commodities to go first. So much like the sell-off we saw here, boom, boom. Here's our minor low. No buy signal on that minor low. Another downtrend tomorrow is when I'll be looking for a minor low, which means that probably Wednesday. And by the way, we have our sector Q&A on Wednesday. So on Wednesday in the sector room, we'll probably be talking about, all right, do we have a potential long setup at this point? So thank you for the question. Darren, I'm with you. Hopefully some blue light specials on the way. I agree. I mean, I see price action like this, and I'm rooting for the bears. Go ahead and drive this market lower. Why? Because almost every time that we've seen this in the past, we've done what? Darvas signal in the wave, red grab candle. Yeah, give me a nice red grab candle, right? Give me a nice red grab candle. Maybe even check this out. Put this on your charts, gang. Put this on your charts. And we'll talk about this more when I'm in the futures room and in the mastery and in the options room. Is put that 55 on there. Put that 55 on there. And we'll see if we can maybe have a nice conservative long call position that we will scale into around that area. So we'll definitely be talking about that more. Is Facebook too close to earnings to buy? 642, my friend. So yes, I'm inside that window. So the problem is this: I do want to be flat before earnings. And that means that not only am I buying options that have higher implied volatility, I have a much shorter amount of time to let this trade follow through in my favor. So it's running out of time, really, is what the issue is. It's really just a running out of time. So I am looking very forward to some, panic. Those folks out there that are short, enjoy. And I thank you, because you're driving prices down to levels that I finally, after what seems forever and a day, can start blue light special shopping. I mean, blue grab candles, blue light special. Let's start. And we've got a lot of cash on the side. We've had very, very few positions. Remember, we're still long bonds. We've got a target 3 out there for my sector secrets folks. That's been a great position for us. So now we get to deploy some cash. So thank you for your patience. But now you see why I didn't want to put us in harm's way. So let's get ready to buy some stuff this week. All right, gang, be good to each other. I'll see you all tomorrow on Charts and Coffee. Thanks as always for your time.